Okay, let's recap what we just learned. We looked at risk and reward and the benefits of each one. So sometimes something has a little bit more risk, but they also have a greater reward. So it's sort of a payoff. So if we start at the bottom, money markets are probably the more conservative, more liquid, and probably the safer of the group. They try to maintain a stable NAV of $1 a share and allow check writing privileges. We move up to bonds. Bonds are pretty conservative, especially if it was a U.S. government bond. That might be terrific for somebody who's new to investing and very nervous, or possibly somebody at retirement that's living on a fixed income. We want to watch for that. An income fund is going to produce income. They might have preferred stock in it, or they might have bonds. In any case, it's going to produce an income stream. So somebody that's looking for a supplement to their income might choose an income fund. We'll go up next to growth and income. Growth and income could be a combination of stocks and bonds, but this will be in a highly capitalized company, one that's very well known and established. Pretty safe, but it's starting to get a little of the capital appreciation involved. Next, we have growth funds. A growth fund would actually invest in companies that are more likely to provide growth or appreciation. Not too risky yet, but still getting more appreciation than the previous funds. Next, we go with aggressive growth. Aggressive growth would definitely be for an investor who is willing to take the risk. So they'll also have a greater potential return, maybe a little bit more sophisticated investor. And finally, we have a specialized fund. Be careful, specialized funds are not good for retired people. As a general rule, 25% or more of their money is invested in a particular sector or a particular geographic area. If it hits big. So it's likely to be a more sophisticated investor that already has a well-diversified portfolio and is willing to take a lot of risk for a greater potential return. That's our risk scale, risk reward.